Good morning. It is Thursday, February 12, 2026. This is your daily global briefing. I am your anchor for today, providing deep insights into the developments that shaped our world over the last 24 hours. We begin our broadcast with a major shift in global security and diplomacy. The European Union has officially launched a new unified maritime protection task force in the Mediterranean Sea. This initiative, known as Operation Azure Shield, marks a significant departure from previous fragmented naval strategies. The task force is designed to secure critical undersea infrastructure, including data cables and energy pipelines, following a series of unexplained technical failures reported near the coast of Italy. Diplomatic observers note that this move signals a more assertive European stance on sovereign security, independent of traditional transatlantic frameworks. Meanwhile, in Southeast Asia, the second day of the High-Level Security Summit in Singapore has concluded with a tentative agreement between major regional powers to establish a hotline for incident management. This development comes as a relief to global markets, which have been volatile due to recent maritime disputes in the South China Sea.
Turning to the global economy, the narrative is being dominated by a significant recalibration of trade alliances. The British government has formally invited several Commonwealth nations to begin preliminary discussions on a new digital trade bloc. This proposed alliance aims to standardize cross-border data flows and digital taxation across 3 continents. Economists suggest that if successful, this could create a massive digital single market that rivals the current dominant platforms in the United States and China. At the same time, the International Monetary Fund has released its mid-quarter update, warning of a diverging recovery. While advanced economies are seeing a resurgence in manufacturing productivity thanks to automation, several developing nations are struggling with high debt service costs exacerbated by the sustained strength of the dollar. The IMF is calling for a coordinated debt restructuring framework to prevent a wider liquidity crisis in emerging markets.
In the realm of finance, all eyes are on the sudden volatility in the sovereign bond markets. Yesterday, the yield on the United States 10-year Treasury note experienced a sharp increase, reaching a level not seen in several months. This movement was triggered by a stronger-than-expected retail sales report, which has led many traders to believe that the Federal Reserve will maintain high interest rates for a longer period than previously anticipated. The ripples were felt immediately in the currency markets, where the yen and the euro both touched multi-month lows against the greenback. In the private sector, several major investment banks have announced a pivot away from traditional real estate holdings in favor of specialized infrastructure funds. This shift reflects a growing institutional belief that the long-term value in a digital economy lies in the physical assets that power it, such as data centers and renewable energy grids.
The technology sector is witnessing what many are calling the second wave of the artificial intelligence revolution. OpenAI has officially unveiled its new Skyline model, which moves beyond generative text and into the realm of complex scientific modeling. Unlike previous versions, Skyline is designed to assist researchers in predicting atmospheric changes and extreme weather patterns with a reported 95% accuracy rate. This pivot toward industrial and scientific AI is expected to drive a massive surge in demand for specialized semiconductors and high-bandwidth memory. Consequently, major chip manufacturers in East Asia are reportedly accelerating their plans to build advanced packaging facilities in North America to comply with emerging trade regulations. This strategic relocation is not just about logistics, it is a fundamental restructuring of the global high-tech supply chain to ensure resilience against future geopolitical shocks.
Finally, we look at the logistics and supply chain networks that underpin the global economy. The industry is currently grappling with a unique phenomenon known as vessel bunching. As major shipping lines like Maersk and Hapag-Lloyd continue their structural return to the Suez Canal, a massive influx of vessels is arriving at European ports simultaneously. This has led to record dwell times at hubs like Rotterdam and Hamburg, where container yards are reportedly at over 90% capacity. To combat these delays, several logistics giants have announced a surge in the use of autonomous trucking for last-mile delivery within Europe. In the United States, the bidding process for the Postal Service last-mile capacity has concluded, with several private consortia winning major contracts. This privatization of certain delivery blocks is expected to significantly reduce costs for e-commerce retailers while providing the Postal Service with much-needed capital to modernize its aging infrastructure. That concludes our global briefing for today. Thank you for joining us.